If I were to start over my trading career, here is the exact strategy that I would use to make $1,000,000. Before I show you guys how to actually apply this to your trading, first we have to review what the strategy is. So the tool that we are going to be using is known as the Fibonacci retracements. What the Fibonacci retracements do is it allows us to understand where price could potentially pull back to which we can then use to identify a high probability trade. So say a stock is uptrending where it's setting higher highs and higher lows. We can utilize the Fibonacci retracement tool to understand where this higher low could be to then identify an entry to get long and catch the next leg up. So in order to draw these Fibonacci retracements, what we would do is find the low of the impulse move, and we would take the low to the high of that impulse move before price started pulling back. Now, at this point, the Fibonacci retracements are going to draw exact areas that we should watch for price to pull back for an entry. So what I can do is I can show you a trade that I ended up taking today on QQQ using the Fibonacci retracements. Now, this was on a lower time frame, a 2-minute time frame. So I'm going to break this down for you guys real quick. 2-minute time frame, pull that up. So if we're looking at QQQ, and honestly, I would prefer to use this on a higher time frame, which I will show you guys. But as QQQ opened, you can see that we had this low point right here, and then a quick aggressive move to the upside before price pulled back. What I ended up doing was taking the low of that impulse move up to the high of the impulse move, and as price pulled back, it bounced off of the 61.8% retracement, 2 cents off, right? It's not always going to hit it exactly, but price pulled back towards the retracement, saw a bullish price action. I got long with my stop loss right below this low and was able to catch a nice scalp to the upside. Another example we can find on a trade that I ended up taking on Meta. So as we can see on Meta on, I believe this was Monday, we had the low before this strong aggressive move to the upside. So what we're going to do is take the low to the high, and we're going to watch price pull back towards the 50 and 61.8% retracement. As price pulls back to the area, we then want to look for bullish price action to then catch the next move to the upside. So going back to the examples, all we need is a low point of an impulsive move to a high point of an impulsive move. And as price starts pulling back, we can then draw our Fibonacci retracement from low to high and watch these areas right here for a potential bounce. Now, as far as using this for a reject or looking for shorts, what we want to look for is for price to be setting lower lows and lower highs. So what we're going to do is we're going to be looking at a downtrend example right here where price sets a lower high and then a lower low. So what we're going to do is we are going to find the high of the impulse move down to the low of the impulse move. And as price starts pulling back to the upside, we then want to look for puts at these areas right here. For me personally, I like to use the 50% and the 61.8%. But if you want to experiment with different Fibonacci levels, you can mess around with the 38.2%, which I know some traders use. I know some traders like to use the 70.7. Sometimes I'll use that. And then I also know traders that like to use the 78.6. But for me personally, I really like to use the 50 and 61.8% retracement. So what we're going to be looking for is for price to pull back into the Fibonacci retracements up here. We're going to be looking for bearish price action. And if price action confirms at this level of interest, we are then looking for shorts with a stop loss right above this high. And real quick, if you are finding a lot of value in this video, if you haven't done so already, I highly suggest you check out my new book, The New Age of Day Trading, The Ultimate A through Z Trading Guide, officially on Amazon. This book is 325 pages and goes over more about my day trading strategy, the exact indicators I use, a lot more about Fibonacci retracements, sniper entries, stop loss strategies, and so much more. So again, I highly suggest you guys check out the book, The New Age of Day Trading, The Ultimate A through Z Trading Guide, officially on Amazon. The link will be down in the description. Anyway, so I can show you guys a bearish example today that actually happened on ES in the pre-market. So as we can see in the pre-market, ES did have CPI. We have this high point right here all the way down to this low point right here. And this isn't going to be the best example, but it did end up working out and you could have caught a nice scalp off of this. So if we take this pivot high to pivot low right here, pivot high, pivot low, you can see that price came up, rejected off of that 61.8, also had VWAP at that area, which you could have used to went short and catch what, like 3-4 points to the downside, which is going to be around $150 to $200 worth of profits. So I like to use this a lot when we have a strong aggressive move to the downside. I would like to see price pull back up into that Fibonacci retracement and then look for puts for more potential downside. So again, you can use Fibonacci retracements for bounces to look for long entries, and you can use Fibonacci retracements to look for rejects for short entries. Now, the common question I get asked about the Fibonacci retracements all the time is, how do I know what time frame that I can use these Fibonacci retracements on? You can use these retracements on so many different time frames. So one level that I told everybody to watch yesterday was actually on QQQ. So if we look at QQQ and I go live on my YouTube every single morning and give these levels to you guys for free, as you can see, we have this low point right here of an impulse move, and then we have this high point right here for an impulse move. So what I did was I took this pivot low to pivot high, and I told everybody to watch 373.32 and 372.34 for a possible area for a bounce. And just to prove to you guys that I'm not making that up, as you can see yesterday, my MAC is set on PST. I'm actually on EST, but as you can see at 6:11, actually 9:11, I am watching QQQ for a reject 380 and then bounces 373.32 and 372.34. So again, today is Wednesday. This was Tuesday right here. As you can see at the bottom of the screen, Tuesday, price comes right down to that area, bounces right off of it. I'm pretty sure it actually hit it to a penny, as we can see right here. Oh, 1 penny off, my bad. And then from there, that was pretty much the low of the day until I think, yeah, we broke below at the end of the day. But again, you can find these on multiple different time frames. I use Fibonacci on weekly charts, monthly charts, daily charts, weekly charts. I think I already said weekly, but 5-minute charts, 10-minute charts, 15, 2-minute, wherever a clear-cut pivot high, pivot low is, you can use that to identify an entry. I love to show this example because this just goes to show that you can use Fibonacci retracements on so many different time frames. So I remember this trade. This was actually a trade that I ended up taking. If we look at the monthly time frame on SPY, I took the 2020 low all the way up to this high, and I have a video on my Instagram the day before this happened because it was either CPI or PPI news the following morning. I told everybody to watch 349.12 for a bounce because that was a monthly 50% retracement. So now if we break it down to a daily time frame, this was the largest rally that we saw on the SPY. As soon as we hit that 50% retracement from the monthly time frame, this was the reaction that we saw to the upside. So the higher the time frame, the more important these Fibonacci retracement zones are going to be. A 4-hour Fibonacci level is going to be a lot more important than a 2-minute level. A 5-minute is going to be better than a 1-minute. A 15-minute is going to be better than a 5-minute. So on and so forth. So again, the higher the time frame, the more important it's going to be. So as soon as you're identifying your clear-cut pivot high and pivot lows, what you can do from there, and I want to say that SPY, or maybe it was ES. I believe it was ES. So if we head on over to the ES futures and we go to the 4-hour time frame and we take this pivot low to pivot high. No, it wasn't that one. I think it might have been this one. Perfect. Okay. So let me clean this up for you guys right here. As we can see, if we take this pivot low to pivot high right here, and again, I did this live in my live stream, told everybody I was watching this 44.35 area for a bounce, and price came down, bounced right off of it. Boom. So as soon as you have your clear-cut pivot low and pivot high, that is when you can draw your Fibonacci retracements. You could even take this pivot high to pivot low to look for a reject as well. So once you have that, boom, you know the levels that you want to watch. This is why I like Fibonacci more than supply and demand and support and resistance. Support and resistance, in my opinion, it's more subjective because everybody's going to draw it different. Some people are going to say, oh, this is a support and resistance area right here. Some people are going to say here. Some people are going to say here, etc. And then when it comes to supply and demand is more so an area that you want to watch, right? Like this would be a supply zone right here, and you want to watch that entire area for a possible reject. As you see, price came up, rejected it right there, and pulled back. But with Fibonacci retracements, it tells you the exact level to watch. That is why I personally like it. So as price is pulling back, I could say, okay, I'm watching 44.56.5 and 44.35 for a bounce. I know the exact level. So once we have that exact level, what we can do from there is break it down to a smaller time frame and then start watching price action very, very closely. When I am day trading, I'm watching the 5-minute and then either a 10-minute or a 15-minute, and then a smaller time frame, 1-minute or 2-minute time frame. Recently, it's been a lot of the 2-minute to snipe my entries. But as we see over here, what does price do? During the pre-market around 850, price comes down, bounces off the level. As soon as the market's getting ready to open, what does it do? Right down to the level, bullish reaction right off of it. As soon as the market opens, what did it do? Bullish reaction off the level. Get long, stop loss right below here. And this is a trade that we took live in Team Bull. So as we see, bullish price action, boom, right back to the upside. Same thing over here, had a nice push to the upside, and then same thing here, had a nice push to the upside. So all throughout this area, we were seeing bullish price action. Again, break it down to many different time frames that you can watch: 5-minute, 15-minute, 2-minute, 3-minute. Let's pull up a 15-minute. Let's see what price did over there. So as we see 15-minute, we did see bullish price action as well. Let's try a 2-minute time frame and see if there's any bullish price action there. But the main thing that you want is you want your level of interest. And then from there, you want to watch price action to confirm that your area is important. Because if we start coming down towards a support area, Fibonacci area, and we start getting bearish price action, obviously nothing is really confirming to get into that trade. But if we start coming down towards support and we're getting bullish price action, then that confirms the trade. And then vice versa, if we're looking for rejects. If price comes up, and I actually think this might be a Fibonacci retracement. Let's see, pivot high, pivot low. You can see that price came up, rejected off of that 61.8. Again, we're watching for bearish price action. You could have taken a short entry, stop loss either above this high or above VWAP, and price went back down and retested that low of day, which again was a 61.8% retracement before another strong aggressive move to the upside. But that is going to wrap up this video on the exact strategy I would use as a new trader to make $1 million. If you guys did find a lot of value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon so you are notified every single time I upload a brand new video. Everybody have an amazing rest of your day, and I'll see you guys in the next video.